Hi guys, this is Lee with the Market Sense for the week of June 4th, 2019. As always, the charts in this presentation are provided to us by Gettess from their Trade Navigator software. And this is a weekly bond market chart, which last week was starting to show signs of getting strong, and oh my, they got the notice about the potential of more tariffs, and quite frankly, they got scared, which causing them to drive higher, trying to push the Fed to lower interest rates, basically, out of fear. Um, this looks awfully excessive, and it looks like it might be turned around, but you will not really make a living trying to sell new highs like this. So I just wait and see how this develops. We were kind of looking after this massive up week closing right at the high that they might reach up here around 155.06 this week. They haven't done that yet, but let's see what the next tweet says, right? The support to continue this move up is all the way down at 151.16, and obviously they'd have to weaken substantially just to get there. And they could go a lot lower. The market's normal course of action is to go back and test what they broke out from, which is quite a bit lower, near 150 here. So a little too much volatility, a little too much action to find any low risk opportunities here, but hey, new highs. Just let them go until they show you they're not going up anymore. And in stocks, boy, this is just fascinating to me. They had this breakdown here on the tariff discussion with China over a weekend. You can see from a Friday to a Sunday night, they had a big gap down and they continued lower. But they were looking like they were trying to form a base, and then they got word of more tariffs against Mexico and had a real breakdown last week. Now, this is what I call an exhaustion bar. It's a little bigger than normal, bigger than just most things, the average you see here, and it closes right on the low. So you can see a little follow through the next week, and they've turned around and come right back up. This is a little more significant than normal, I guess you might say, because this area right here, this lower moving average, is around 27.85. If they were going to continue to trend lower, that's about as far as they should have gone back up to, and they seem to be exceeding that fairly easily. Next target's up here around 28.20 to 25 in this area, and I'm not going to tell you they can't go to 28.70. Now, some of this recovery is based on a statement from Fed Chairman Powell, who said they would do, quote unquote, what is appropriate with interest rates if there's trade problems. Well, what's appropriate? The market obviously took that to mean he would cut rates, and that's probably what he meant. But either way, it's like we're not analyzing markets, we're analyzing political moves. Kind of a difficult way to go here. But the exhaustion bar did do its job. They ran out of sellers and they turned around and went back up here. I would think 28.20 to 25 is very likely this week. And again, 28.70 is possible. I don't really expect to see them go back down to this support here, which is around 27.20. If they do, that probably is not going to hold. So that's what we've got for you today. I hope you can find something profitable to get yourself in.